All right, guys. This morning I'll be going through certain things on the chart to show you how I enter the market. And I'll prove to you that liquidity and structure is actually what you need to be profitable in the markets and also weak rejection. So I'll go through the chart. I'll show you market structure, talk about market structure, talk about advanced market structure. We'll also talk about our entry model. Okay. All right. Let's go back to the chart. All right. Hope, hope you are seeing the chart, right? Okay. Now, prior to this time, we have said that we have talked about market structure, right? We have talked about it, right? We have talked about market structure. And we said that we have three types of market structure, actually. Okay. We have an uptrend where you have price making higher highs and what higher lows, like this, isn't it? All right, so at every point, as we are progressing upwards, we are breaking structures, right? This is a break of structure, right? This is also what? A break of what? Structure, right? So when the market is actually pushing up, we are moving upwards, we are bullish, right? So because we are breaking structures upwards. So this is one market pattern. You also have a downtrend where you see price making lower highs and what? Lower lows. We are breaking structures to the downside. So this is a break of structure. Okay. We also have a break of structure here. All right, good. So these are basic market structures. Okay. We have advanced market structures that you need to know, which I'll go through. So at every point, as we are, you know, retracing and then impulsing, we are actually taking liquidity from both sides, which I will talk about as we progress. All right, now, knowing only this is not enough. Knowing only this as a structure is not enough. We have what we call advanced market structure. I hear what I'm saying. Now, an advanced market structure is simple. Okay. When you have price doing this, for instance, if you can understand this, your profitability will increase. If you see price doing this, coming down, and then push up, and then you start seeing price doing this, okay? You start seeing price doing this. Now, if you look at this chart very well, you will know that we are breaking structures. Okay, from here now, we had a break of structure. All right. But from that point, you also have one here, all right? You also have that break of structure there. All right. Now, we have what we call swing points. Okay. Swing points on the market. Swing points are actually the point that market in a bearish instance now, okay? In the point where market should not take out. All right, so at this point, technically, if you look at it very well, it is this high here. This high, okay, led to the break of structure of this low. So technically, we can say that this high here is our swing point, swing high, okay? So for price to remain bearish, I don't want to see price take out this guy here. As price was assuming price came and took out this guy, I am not bullish. Sometimes what price will be, price will weak, okay? If price weaks around that point, does not mean that the trend has changed. For instance, now, you may have this, you may have buyers push up, okay, like this, and then creates a weak here. All right, creates a weak here, for instance. And then next thing you see is price. Price will just, okay, retrace and close below this swing high. We are still bearish. Okay, so this is a swing high, a very important point. All right, that is a swing high. So if we have a candle that closes like this, we are still bearish. Take note of that. All right, so after that, we saw price from here pushed up, okay, to this high, and then rally down. So my next swing high is this point here. All right, that's my next swing high, because price has retraced and then price has broken structure. So this point now, all right, this point is now my next swing high. So provided price has not taken out this guy, I am still bearish. I hope that is clear. All right. So this is what they call advanced market structure. All these things you see here, all these movements you see here, okay, all these movements you see here are what we call internal structures. They determine the next phase the market will go to. So these are internal structures, okay. So your focus should be on the swing high, not on the internal structures, okay. All right, let's go to the chart. But before we go to the chart, let me show you something, okay. Let me show you something from the chart, okay. Please stick to this video because I'm going to move to the chart and I'll show you how we do it. All right. Now we know that the price moves in two phases, the bullish phase and the bearish phase. I'm not interested in consolidation. I don't trade, so it's not in my context. All right. Now, how do you identify a sweep, a liquidity sweep? Okay. Let's assume that price is coming down. Price is coming down like this. Okay. Price is coming down like this. Okay. In a bearish market, all right. And then this guy has a week here. Okay. This guy has a week. All right. Let me make that week again. Now, this week here is very, very important. Sometimes what will happen is price will push up. Okay. This bearish candle will push up and then sweep the second candle. Okay. So that means we have a sweep. This is a sweep. This is a sweep. This is what we call liquidity. There's no much talk about it. Okay. So that is liquidity sweep. All right. All right. That is liquidity sweep. Now, why does this occur? There are persons that are actually selling here. Okay. They will sell here. Their stop loss will be down somewhere here. And then they will target somewhere here. So because market makers know that they are going to sell there, what they will do is they will push the price up, sweep them out, and then rally down. Okay. Then in a bullish way, you have price pushing up like this. Okay. You see a wick here. You see a wick here. All right. This is a bullish trend. Let me show you the All right. So as price is pushing up, all right, as price is pushing up, sometimes what will happen is you will see before price break structure, it will come back to sweep buyers here. To come down this way. You will see that sweep here, where you see wicks. Now take note, for you to know a sweep, this week must be longer than this. So this is also a sweep. So that's what we have to talk about today. All right. So I'll move to the chart. So how do you now trade this? You will trade it by knowing the buyers first. Okay. Once you know the buyers, so the first thing to do here is okay, identify the overall bias. Okay. The overall bias of the trend. Okay. Identify the overall bias of the trend. And secondly, what you'll be doing is you need to look for that sweep. Yeah, wait a minute. You need to look for that sweep, all right? That sweep of liquidity. Okay, so remember I said the first thing was identify the bias. Okay, identify the bias. Okay, and then secondly, find the sweep. Simple. Find the sweep of what? Liquidity. Okay, so once you identify the bias and then you can find the sweep of liquidity, you can now trade. All right, you can now trade with it. It's simple. So I'll move to the chart now and show you what I mean by that. So take, for instance, now, let me take out all this, okay? Let me take out all this, all right? Now, this works across any assets, okay? Whether it's gold or whether it's pounds, USD, it works across any pair, all right? So I don't want to disrupt what I'm doing. So you just have to be patient, okay? Patience is the key, okay? All right, now let me show you something from the chart, all right? So this is pound JPY, okay? Remember, you can do it in any asset, all right? This is pound what? JPY, all right? Now, let us identify the overall bias of the trend. If you look at this technically, okay, let me move to the weekly time frame. All right, so So by structure, we are bullish. Okay. By structure, we are bullish. All right. By structure, we are bullish. Okay. So if that be the case, then we should be looking for what? The sweep. All right. Right. So let's go. As price came here, there was no sweep here, and then price pushed up, came down. There was no sweep here. All right, we have this sweep. This guy swept this. Let me change that. So you can see that this week was taken out. All right, so we would have bought from here, because now that you know that you are bullish, you are trading in line with the trend. So if you are targeted 1 to 2 risk to reward ratio on the 4-hour time frame, and then we pushed up again. As we pushed up, we retraced, we pushed up here. There was no sweep. We don't have any sweep here. And then we pushed up, came down. There was no sweep here. We pushed up, we have under sweep again. This guy swept this. Okay, that is the sweep, taking out those buyers from there. So we would have bought it from here now. We would have bought again from here. Okay, and then you can target 1 to 2 risk to reward ratio, or at most 1 to 3. All right, so we came back again. We swept this guy again. Let me take this guy out. We swept this low again. All right, we swept this low again. Boom. So as we swept it, you should be looking towards enter. You should enter. Now take note, you enter after the candle has closed. So this year you would have entered from. You can't keep your stop loss here. Yeah, so by now you should have a proper risk management. Okay, and then I'm expecting this market to push up. I can target this high here. Okay, I think with this high, so I'm expecting this market to push to the upside. So let's go to another asset, and I'll show you. Let me show you. I'll show you another asset. Yes, okay, let's go to BTC. BTC USD. It happens. Remember, this is the 4-hour time frame. BTC is bullish, right? By now, you should know. All right. Let's assume you came to your chart at this point. Okay. I hope you saw this sweep here. You saw it sweep here now. Okay. We had that sweep there, right? So this is what we call liquidity. Okay. So that is a sweep. That is a liquidity sweep. Okay. That is a sweep of liquidity. So at this point now, you would have entered from here. Since you know that the overall trend is bullish, this year you would have entered from. Okay, your stop loss just below that low, and then you would have targeted at most 1 to 2 risk to reward ratio. Again, we pushed up and then fell, retraced, right? There was no sweep. This is not a sweep. It's just a break of structure. Okay, it's not a sweep, so don't be deceived by that. The only sweep that I'm seeing in this guy, price came and swept this guy. How do you say it? And then you would have bought from here now. You would have stacked your streets from here. Okay, your stop loss just
Happy Sunday.
below that level. And then your target 1 to 2 tricks to evaluation. It's as simple as that. So that is it, guys. All right. I believe that by now you would have understood this. All right. Bye, guys.